Treasury Metals is exploring and developing the Goliath gold complex in Ontario, hoping to be among Canada's next producing gold mines. The company has made big strides in this regard since we last spoke to CEO Jeremy Wyeth last summer. And apart from getting an update, we want to hear more about the big royalty deal Treasury just announced. Welcome, Jeremy. Jeremy, as I said, our last interview was some time ago, namely, I think in July of last year. So perhaps you could tell us or remind us shortly what Treasury Metals is all about.
Absolutely, Bjorn. And yes, it has been a while. And my gosh, how time flies when you're busy. Treasury Metals is a Canadian gold developer in the sought-after Tier 1 jurisdiction of Northwestern Ontario in Canada. And we have critical mass, and by that I mean 1 million ounces in the mine plan, 100,000 ounces per year for 10 years. We also have massive upside in our underexplored Goliath Gold Complex. And what we've done over the last year is put a team in place that has significant mine building experience. If you remember, we also have a federal EA in place. And most recently, as you alluded to, the funding now to take us through all the activities required to a construction decision towards the end of next year.
Okay, yeah, that sounds good. Let's talk about that funding then. I think it's a pretty spectacular $20 million royalty financing with Sprott Resource Streaming and Royalty, just announced day before yesterday, I think. Please run us through the details and the reasons for the deal.
Certainly, Bjorn. We announced on Monday it's $20 million financing with Sprott Resource Streaming and Royalty Corp for a 2.2% net smelter royalty on the Goliath Gold Complex. Now, the nice thing about it is the royalty contains buyback provisions that allow us to repurchase 50% of the royalty in a cash or in shares, and that's at our sole discretion at various prices until the end of 2028. Also, very importantly, is there's a step-down provision that reduces the royalty by 50% upon 1.5 million ounces of gold being produced. It's not often that you can get both of these in these royalties, so this really was for us very important. There is a participation agreement that gives Sprott the right to participate for up to 40% or $40 million of any potential streaming transaction as part of a future financing for the construction of this project. As part of the agreement, we will pay to Sprott $2 million on an annual basis, paid quarterly until commercial production, or 31st of December 2027, whichever is the earlier. And we can make these payments in cash or shares at our option. And the shares here are issued at a 5% discount to the 5-day VWAP. This is better economics than doing a brokered financing, as we get all the cash today and we issue the shares in the future at what we hope to be higher prices. Additionally, equity financings at the moment are running at a plus or minus 15% discount to trading. Plus you have your brokerage fees. And we are seeing typically a half to a full warrant on all of these financing. So this significantly reduces our dilution relative to a brokered financing. We think it's a very attractive option for us. It was completed at a significant premium to our current trading multiples, reducing the potential dilution to shareholders. And we have listened. A lot of our shareholders have said how important that is, and we really have listened to do that. And this now provides us with that financing through the pre-feasibility into the feasibility, all the permitting, the community engagement, and really takes us to a construction decision. I also think, importantly, it's a stamp of approval and an endorsement of our management and our plans for the project. This is a major financing group that, after significant due diligence, and I'm talking technical, legal, financial, believes that this project is going to get built and it has the right team in place to take it through to operations. And we expect this to close probably by the end of March.
Well, that sounds very interesting, and you're right, of course. At the moment, brokered financings come at big discounts, certainly most of the time larger than 5%. We'll talk about what you will do in particular with all that money shortly. But before we do that, let's take a step back, because 2021 has been a busy year and so the largest ever drill program undertaken by Treasury. Please just give us an overview of what you wanted to achieve and what you actually achieved last year with that.
Thanks, Bjorn. Yes. If we look at, I joined towards the end of 2020, and then 2021 really has been a busy year. If you remember, we had the acquisition of Goldland towards the end of 2020. Soon after that, we put out our PEA with really good financials. We then raised some money, and we embarked on a 60,000 meter drill program to convert inferred to indicated, and also very importantly, to test some exploration targets. I know at the time, quite a few people said to us, that's pretty ambitious, the largest program you've ever done. Really, really pleased to announce we actually achieved 60,085 meters, and we finished that around the 20th of December. The one challenge we've had, as I think everyone in the industry has, is we're seeing a delay in getting assays back, but they are coming in at the moment, and we're still on track to have our updated resource estimates out by the end of Q1 this year. I think importantly for us is, as you said, what we set out to achieve and showing that we've actually done that. Also important is, we've only explored well about 3 kilometers of the 65 kilometers of strike, so lots of upside there. We raised money towards the end of last year. We raised 6.5 million in flow-through funding, and that'll fund our drilling for this year. So we have about a 25,000 meter drill program already funded. So the money we've raised in the royalty is specifically it's for the hard dollars, for the technical studies, the permitting, the community work, and corporate stuff. We progressed the trade-off studies that we spoke about last year as part of the pre-feasibility, and a lot of those have got to the stage now where we're waiting for the new resource estimates. We've done a lot of metallurgical test work. We've done silver assay test work. We've now sent over 3,000 samples to the labs because we see the opportunity to add that into the financial model. So, we said we would build a team. We said we would do the drilling. We said we would do the trade-off studies, and we said we would find a way to finance it. And I think, Bjorn, it's pretty fair to say we've achieved what we set out to do in 2021.
Certainly sounds like it. And I guess in parallel, you've been pretty busy with arranging the financing, because that doesn't happen easily or very fast or very quickly. You already touched about that in saying that you have a 25,000 meters of further drilling planned and want to finish those trade-off studies. But let's talk about the overall goal. Where do you want to be at the end of this year when all the dust has settled, so to speak?
Yes, and just like 21 was a really busy year, 2022 is the same. As I said earlier, we are preparing to get the resource updates completed by the end of Q1. And then the pre-feasibility is due to be completed by mid-year. So there are two major milestones that are coming. If I look at some of the trade-off work that has been completed and what will continue as we get the resource updates, it includes things like the transportation studies of the material from Goldland to Goliath. The metallurgical test work, the last time we spoke, I told you that we were concerned that not enough test work had been done at Goldland and Miller. So we've done, and as recent as last week, we got some of the final results back and the reports are being done, but really pleased to report that we're seeing a good improvement in the recoveries there to get it back up to what we felt was better benchmarks. We've sent just over 3,000 samples silver assays away. And you'll remember last year too, we had a few press releases where We had silver credits at Goliath, but nothing at Goldland and Miller. So we sent some old samples away. We've tested all the most recent samples, and it's come back. No surprise, there is silver available for us at Goldland and Miller. So now we're sending a lot of historical information away so that we can add this revenue stream. We've looked at new tailings designs to fall in line with world best practice. From 2019 with the disasters, the unfortunate disasters we saw in Brazil, a lot of this has changed, and we've seen some really good opportunities to improve our technical designs, create a facility that's easier to build, easier to operate, easier to maintain, and easier to close. And it looks like we have some potential for savings in it as well. So again, good news. We're looking at reusing the infrastructure and buildings at the tree farm that we have at Goliath. We had almost $10 million in the PEA for offices and buildings and workshops. So we're looking at being able to save, we're hoping up to 60-70% of that in the next phases. So I think you can see, we've taken the financial model from the PEA, and there are two ways you can attack it. One is from a revenue side and one is from a cost side. So with the MET test work and the silver, we giving value to the revenue side. And then things like the tailings and things like the infrastructure, we're looking at how we can reduce costs. By the end of this year, to finish that off, Bjorn, by the end of this year, we will be close to completing the feasibility study, which would come out at the end of Q1 in 2023. So this year is resource update, pre-feasibility, and a large portion of the feasibility completed. And then that takes us into the feasibility at the end of Q1, and then permits and a project financing for us in Q4 of next year. So, when I say we're busy, we are certainly going to have a lot on our plates over the next 18 months.
That's certainly true. And because not only you yourself, but also investors will try and hold you to that and push you to hold to that schedules. So we see how it all goes. We all know that what with the COVID still going on and people not being able to work in the office, there's sometimes lags that we didn't have before. But hopefully you'll be able to work around that. And as you said, essays will be coming soon, which was related to that kind of problem. So my next question was going to be, this was for the longer term, for the shorter term, for the next couple of weeks. What can we expect? But I guess there will be drill results and then the new resource calculation, right?
That's correct. We're actually, what's quite exciting is we're starting to get, in Q4 of last year, we did a lot of the exploration drilling. And we're starting to get some of those results back. And I've always maintained that there's really good upside for us on the exploration targets. So we're starting to see that. So we should see some of those results coming. We should see the resource updates. And then more drill results from the drilling we're doing this year, and then a PFS mid-year. So for over the next 6 months, it's going to be the drilling, it's going to be the resource, and it's going to be the pre-fees.
Well, certainly interesting, and certainly looks like you will have a lot of it on your plate. Now, despite all these strides you've made and all the progress on the work front, the Treasury's share price has had a pretty rough 12 months. So why is that, do you think? And do you think now at this moment in time would be a good time to have a closer look at the stock again?
Great question. Great question, Bjorn, and I get this question a lot. I evaluated the last 12 months for us, and what I found is that, in the markets, there was a disappointment. There was a large expectation in the PEA that the resource was a lot bigger and the timelines were a lot shorter. Now that we've reset that and we're working forward, it's interesting. If we look at the last 12 months and then we look at the last 3 months and the last 6 months, our performance compared to our peers in the last 3 months puts us in the top quartile. But if you look at it over the last year, where you include that PEA where we saw a drop, it puts us a lot lower than that. So to me, what we're showing is that through the year, we've actually, compared to our peers, in the last 3 to 6 months, we're actually doing well. I think, if you look at why people should look at us, there are not really a lot of developers at our stage that have a federal EA, a massive upside on the land package with so little explored, a team in place to build it, that critical mass of having 1 million ounces, 100,000 a year in 10 years. And now the final tick for us is we actually have the funding that's needed to take us to that construction decision. And if you look at the market, I think we're trading at a significant discount to our value. And for people now, it's a really good buy to get in, because we're actually not going to be going out to the market to raise a lot of money in the next 18 months. So if people want to get in when the price is really low, now's the time to come in. And, as we get this thing further along the line towards construction, we do see the opportunity for a major appreciation in our share price.
Very well, certainly sounds plausible, because always a lot depends on the sentiment in the sector. And while gold has been hovering about the $1,800 mark for I don't know how many months now, and perhaps we can get a bit of a lift there for the whole sector too. I've certainly seen some people thinking that the drought might be over, so to speak. So we'll see if that works in your favor too. Thank you very much for taking the time, and we'll be sure to talk to you again, probably when the resource numbers come out, and then to see how it all went. Thank you very much.
Absolutely, Bjorn. Thank you, and as always, a pleasure to chat to you and give your listeners an update. Thank you.